3 reasons gold will continue to soar in May. Need to see this coming. We're seeing gold do the impossible. While the dollar is showing strength against inflation and treasury bonds are showing strong yields, gold continues to soar into record high spot prices. This is the unexpected. This is the unthinkable. This is the opposite of what gold is supposed to do. And in this video, I'll show you how gold will continue to move higher. I'm going to break this down for you. Gold will not hit a correction as others are predicting. This is from an article on Yahoo Finance that shows us 3 ways that gold will continue to soar. And I absolutely agree with this. The article says, you may be aware of the importance of saving for retirement, but in the course of doing so, it's possible to fall victim to certain mistakes that have the potential to lead to really unfavorable results. And this article shows 3 different ways that people are making mistakes with their money presently today that is impacting what they're doing. And therefore, people are realizing this and turning toward safe assets like this gold here that I'm holding in my hand, moving toward precious metals. And yes, their other option would be to move into real estate, but real estate is just impossible to get into now with a 7% mortgage rate. There's no way. So everybody is going into gold. Let's continue with this article. It says, many people are waiting too late to start with their savings. The article says, you might assume that it's perfectly okay to start saving for retirement in your 40s. After all, you may not earn a huge wage in your 20s, and during your 30s, you may be focused on goals like saving to buy a home. Again, putting your savings into as a first-time home buyer, putting your savings to a home presently, even though it is right now April and we're soon to be in May. This is supposed to be the real estate season, but no one's going into buying a home, especially not these first-time home buyers. They're not taking on a 7% mortgage rate for 30 years. That's unheard of. This article says, while starting to save for retirement in your 40s is better than starting in your 50s, by waiting that long, you're setting yourself up to miss out on many years of investment gains. The stock market over the past 50 years has delivered an average annual return of 10%. With a stock-heavy strategy, your returns might be similar. And if you are going to this stock, as according to this article, if you are going to go into precious metals, you will see an enormous gain, just like we have seen in the past 6 weeks. Likewise, going into stocks, I know as silver stackers and gold stackers, we don't like looking at going into stocks, but I'm just going to show you what this article says. It says, so let's say you make a single $2,000 contribution to your IRA, your individual retirement account at age 42. By age 67, it'll be worth about $21,000 based on that 10% return. But if you had made that $2,000 contribution at age 22, by age 67, it'll be worth about $145,000. Now, the stock market is not as stable as precious metals, like I'm showing you here. It is not as stable, but historically, if we look through the past 20, 30 years, the stock market has performed very well. Clearly, nobody can fight that. It absolutely has performed very well. So if you're looking in the long term, just as I, as a silver stacker and as a gold stacker, I look at precious metals as a 10-year, a 20-year, at least a 20-year plan. It's the same thing for stocks. If you're going to go in, if I was going to do it, I don't invest heavily. I do have investments in stocks, and not as heavily as I do in precious metals. But if for what I do go in with, I'm not looking to get a big return in 6 months, in 12 months. I'm looking for a long stretch, just as I do with precious metals. Now, many people are steering clear of stocks, and this is also what this article shows. It says, with a stock-focused strategy, you might manage to generate nice returns, but if you're more risk-averse, you may be inclined to steer clear of stocks to avoid taking losses from year to year, just as I'm saying. The decision, however, could really hurt you financially. This article says, let's say you contribute $200 a month over a 40-year period. Only because you invested conservatively, you would end up with a 5% return on your portfolio. That will leave you with a total balance of around $290,000. But with a 10% return, you're looking at a balance of at least $1 million, 1.06, at least $1 million. That's an enormous difference. And as we see gold pushing up in the past 6 weeks, clearly people are not putting their money into stocks. They're not looking at this long-term investment with the stock market. And even as the dollar shows strength and treasury bonds show strength, they're not going into treasuries, they're going into gold. And there's nothing showing us that that's going to change in May. In fact, it will most likely increase, especially as we see the plans for rate cuts slip through our fingers. I mean, I'm putting it lightly, but we originally started 2024 thinking there would be, some people thought 5 or 6 rate cuts. Now we're looking, not only does June seem to be slipping away from us, but we're looking at possibly September, even maybe just one in December. That's what we're looking at. So people are seeing this and they're realizing, I want to put my money in something safe, and they're watching what's happening with gold. And even though the dollar is showing strength, last week the dollar showed great strength, treasuries showed great strength, but gold continued to climb. It did the opposite of what historically it has done. This is very exciting for gold. And it's just another reason why I see, as April closes out and May comes in, I see gold continuing to soar, absolutely. And I see people continuing to go in. Here's another point that this article makes on Yahoo Finance. It says, taking a withdrawal ahead of your retirement. It says there may come a time, this is a big mistake that people are making. There may come a time when you decide to tap into your IRA. And this is a big risk because, as we all know, you'll be hit with at least a 10% withdrawal penalty. And if you've been putting money into that 401k, that 10% really hurts. This article says there can be exceptions to that rule, such as taking out $10,000 for a first-time home, but we've already talked about that. Most people are not picking up their first-time home because real estate is stuck with that 7% at least. Sometimes it's even more than a 7% mortgage. This article says, in fact, you may be inclined to do the latter if you need funds for a down payment and won't have to worry about a penalty, but taking a single withdrawal ahead of retirement can have serious consequences, and people are shying away from that. Even as credit card debt is just booming and swelling in our country, people are still taking that risk and pulling from their retirement. There have been much data coming out lately of people pulling for their retirement just to pay off mortgages, right? Just to pay your monthly mortgage. I mean, they're not even putting it in an investment, and that shows no sign of stopping. So I absolutely see in April, as we close out April and as May comes in, I see gold continuing to soar. I'm just as you are. I'm very excited to see these gold prices. I mean, $2,400 over the weekend, and this is just fantastic. We've been waiting for this for a long time, and this is just bringing us closer to that $3,000 an ounce mark. It's really great, and the gold to silver ratio shows us that it's still a good time to pick up silver. It's still a good time to go in on silver, and even at $28 an ounce, silver is absolutely within reach, more so than gold. So this is the time to continue and hold precious metals. That's my opinion. I'm not a financial advisor. I'm just a stacker. But I say hold silver, hold gold. Do not cash out. Just enjoy this upswing and watch it, because it's absolutely going to go higher and higher.